Morning. How's everybody? Sorry I'm late. Somebody nicked the cable this morning in my spin class for the music system. So the class started 7 minutes late. So I'm normally late on a Thursday. This morning I am super late. So sorry about that. Nothing I can do. Right, where are we? Morning, everybody. I'm totally disorganized this morning. Morning, Ian, Bradley, Leshy, Danny, Christian, Martin, Gregor, Zazy, Amy, Baggy, Grateful, Virginia, Michael, Magnus, JC, God Morgan. So Thursday today. It is Thanksgiving. So there's no live room this afternoon because there's no New York session because the markets are closed. I'm not here tomorrow either, so there's no sessions at all tomorrow. I'm back on Monday, so this is the last session of the week today. Thanksgiving, we've got bank holiday in Japan, and it's obviously Thanksgiving in the US. So this day, Thanksgiving Day, is very hit and miss. So we sometimes get really strong movements, which are one-sided from the European markets. Sometimes we get no movements because they don't bother. It's very, very hit and miss and random. So we'll have to just wait and see what happens this morning. So it could be that we have a quiet opening this morning, but we have got major news coming out. It's PMI day today. So we need to be aware that obviously 8:15, we've got the French, then 8:30, the German. The European doesn't really do anything because it's an amalgamation of the French and German. So once these two are out, we know the results. So that doesn't really have any impact. Then 9:30, we've got the pound. So we are going to have some volatility probably around these, but I think the open today is probably going to be quite quiet. So let's have a quick look at the DAX. Yeah, there's not been any pre-market movement at all. So we've got a fairly tight pre-market range today. So we'll see how it goes. I'm going to trade it, but it's one of those not sure if it's the right thing to do sort of days today. So we'll see how we get on. Give me 1 second. Do multiple things at once. Literally not moving, is it? Let's just double check that this platform hadn't frozen up, but it literally isn't moving. So we'll see how we go, but might be a bit of a whitewash this morning. The market is probably going to wait until 8:15 to make its move today anyway, because it will want some confirmation of what the CPI figures are going to be in the Eurozone. So I suspect today we're going to get a very tight open. Where are we? 1, 2, 3, 4, 5, 6. So that is the range. Yeah, the pre-market range is going to be too small to trade at the moment. If it ticks down a couple, we might just about get it now, actually. Let's have a look. That's probably big enough now. On 50, yeah. So that will be the pre-market range today. From that, basically pre-market high to that black line. So we'll see how we get on, but it's going to be a tricky one this morning. So PMIs all day up until 9:30. Then there's no more news. We've got overnight retail for New Zealand, and then tomorrow afternoon we normally get all the PMIs on the same day, but obviously because it's a bank holiday in the US, they've moved the PMI figures released through to Friday next week. So that's Friday tomorrow. So we've got the US PMIs tomorrow, but as I say, I'm not here, so that's the only news you've got to worry about tomorrow. Sorry, we've got 1 minute to the open, haven't we? Let me just have a quick look at overnight news. See if there's anything interesting. Australian manufacturing, blimey, that killed the Aussie, didn't it? I'll have a look at that in a minute. That's it. So there's no overnights to look at. I believe we are close to levels seen as a terminal rate for the euro, which is kind of know that anyway. So no, nothing exciting overnight. So let's have a look, see if we get any movement. I mean, we are right at the low, so it's not going to take much to give us a short break, which would be dangerous because if it doesn't break short, we're obviously immediately going to get hedged. So we will see. 130 on a 138 pre-market range, so that's too small to trade. I can't do maths, can I? 6. 1, 2, 3, 4, 5, 6. Oh, yeah, of course. It's that candle as well. Yeah. Sorry. Yeah, 130. So the pre-market range is too small. So that solves that problem. It's 5-minute opening range break today. And by the look of it, if this doesn't pick up a little bit of volume, we're not even going to get a range tradable on the 5-minute ORB either. So it might just be a no trades day today. We will see if we get any volume, but that looks pretty quiet, doesn't it? Morning, Rajiv. Morning, Burke. Morning, Jacob. Morning, Neo. Morning, Yoko. So we'll wait for that 5-minute candle to go in. I'll keep an eye on it over there. But we'll have a look at FX and see what's going on here. So Euro CAD. I was very close to closing this out yesterday. I've got a really nice profit on this, and I'm undecided what to do. This, to me, looks like it's rolling over. We've got the CPI figures for the euro coming out in, obviously, 15 minutes. So what I've decided to do, because I've got some profit on these euros, is this Euro CAD, I'm going to close the top position and bank that. That moves the average down slightly. It's still well within, obviously, ADR, but it puts basically 1% in the bank. The reason being is if the ECB numbers all come out as higher than forecast for the PMIs, we're going to get a rally on the euro with French and German, obviously. So what I don't want to do is obviously have all of that profit, because that was in total profit, that position. I don't want it all just to disappear because of the CPI figures. On the other hand, if it drops the CPI, that's fine. I'll be able to bank, close the whole lot out. So I'm just putting some in the bank because there's a 50-50 shot, obviously, of it going up and down, and I can't get it back. But what I can do is I can add it on again. So if the price pushes back up, I will add that position back on again and wait for it to come down and take it off a second time. So bank it twice, basically. CAD Swiss, the Swiss franc will probably be affected by that as well, but I haven't really got much profit on that, or have I? Oh, yeah, I have. Should I bank some of that as well? That's a tricky one, that is. I'm exposed to the opposite direction on that. I'm going to leave that one on for the moment because it's all the way down there. What I might do, might break even, stop that position just in case, just to protect it, just so I don't lose and go into drawdown on it in case that that euro number is really big. Obviously, CAD Swiss is going to come down. So euro pound is in profit. Not by much. I'm just going to break even, stop this as well. It's not enough profit to bank. And if this euro number comes out massively bad, I don't really want to go into drawdown on it, to be honest. Problem with the euro pound is it is such a, I mean, this is the first trade I've had on it but since August. It just doesn't, as you can see, it just doesn't move. So what I don't want to do is basically just go into drawdown and sit in this for a week or so, because that's potentially what could happen. So I'm just going to put a break even on that. There's no point. I'm not here tomorrow as well, so I don't really want to babysit it. So we'll see what happens. Blimey, DAX is gone. So there you go. If you did take any kind of pre-market range break today, so if you're trading with the ORB EA, you would have taken probably maybe a 15-minute pre-market break, so you'd be long. If you were using a different range calculation there, you will be long. You might even be short as well because that actually wicked down. So that might have been a hedge. But so there's your 5 minute range in. So I will be trading that one by the looks of it. What's that? There we go. 267. So we'll see where we go from there. We've got 10 minutes until the news. So I suspect we will probably just see inside bar basically until the news. And then the news hopefully will give us that break. See where we go. Morning, Mark. Right. So let's have a look at the FX markets while we're waiting because that thing ain't going anywhere. ADRs today, nothing. So totally flat. I'm thinking it's probably going to be one of those flat days today, to be honest. So once those PMIs are out, if the PMIs will come out as forecast, there's no reason for the market to actually do anything. So we'll see what happens on the news. But so there's no ADRs to look at. The weeklies we've already looked at. So all the weeklies have played out. CAD Yen was your weekly. That was your weekly hit down. Beautiful retracement. So that's played out lovely. Swiss Yen, same thing. Played out lovely. Euro Yen, funnily enough, that's not done quite as well actually. Where are we? Thursday, Wednesday. So you would have got in on a reversal at, you've had 135 pips out of it, which is over an ADR. So that's played out nice as well. New Zealand dollar CAD, already out of that one. And US dollar yen. So all the weeklies played out absolutely beautifully today, this week. So straight in, straight out on all of them. As soon as we hit those weekly ranges, we reversed and we've pulled it back on all of them. So question is on all these yens now, are we going to continue and do another leg? Or is this the start of the next rally against the Japanese and a continuation of this upward movement? But the volatility on this is very difficult to read now. It's just all over the place, isn't it? No real direction to this. It could go absolutely anywhere. So that's all your weeklies. We are obviously now on the 23rd of the month. The only monthly range extension we've got at the moment is on the Euro US dollar. So it hit its monthly range, not by much, by 30 pips. So that one obviously is extended to the upside. That was your monthly range hit there. So that is basically as far as we've pretty much gone beyond our monthly range, and that has started to reverse. So I didn't look at that one when we got the alert on it. I was already in it anyway on the hourly. So we're looking for a pullback on this. Didn't quite get far enough yesterday to get me out. It's pulling back. So hopefully the support rectangle is going to hold. That reversal in structure is going to hold. And we're basically going to start a new structure to the downside, put in a lower high somewhere around this propulsion gap, and then come down and test that for a double bottom. So if we can start to form some kind of range up there, that's absolutely fine because it gives me an out. Ideally, though, we'd like to break down. So, but I'm not looking for a lot of profit on that. Just want to get out because the problem with this one is the distance between trades is far too big. That's 2 ADR because of the CPI figures. So that caught me out with a very difficult to exit position. So an ADR today, just over, will get me out. Afternoon later on. I say that afternoon because you're late. It is the morning, but we'll let you off. I was late this morning as well because my class ran over. So that's your ADRs. RSIs, totally flat. There's nothing to look at on the RSI side of things at the moment. 4 hours, totally dead. They've all started playing out, which is why, because we were extended and now we're not because we've started pullbacks. Euro US dollar is not the best example because that's the back of CPI, but they have all started to play out. So obviously that's why I had a fairly decent week this week, banked 5%. So yeah, everything's started to play out nicely. The only extension we've got is the New Zealand dollar yen, which is now extended. Or just about extended to the upside on the hourly. So again, this is the question, isn't it? What's the market structure? Are we looking for a new weakness to start in the yen and a new leg up? Or are we now starting to power up this yen and we're looking for a pullback short? That's the question. So we don't know. If I mean, it doesn't, as long as market structure is in place and we use market structure to get to wherever we're going, it doesn't really matter which way you go. But there's noise about the Japanese increasing interest rates for the first time in nearly 7 years now, next year. If that is going to be the case, that is going to power up that yen, and we should get a sustained rally on the yen. But obviously, as I say, as long as it does that, it doesn't matter. So you could take it in either direction. But that looks to me like a pretty nice area to start to get in, because if we aren't going to put market structure in, hopefully we'll just go into a range. And you'll have options to get additional entries when we double top, because they'll probably sell the double top. So first entry, you could start there. I wait for the 75, so I'm waiting for a little bit more of a push. If we can get an ADR hit today, I'll be in short. Well, I would be. I'm not going to, because I'm not actually trading the yen at the moment, and I'm not here tomorrow, so I don't want to get into any positions today on any yen, but that would be my play. A little bit more of an extension to enter, same as this one here, basically, and that one there. Get in there. There's an additional entry, roughly half an ADR, and then wait for a pullback. So that is your only RSI, and that is your ADRs. There aren't any. So crappy day today. 5 minutes to the news. DAX is inside bar. So we haven't broken out of the initial cash balance. So nice break today, potentially. So what I'm going to do is I'm just going to reduce the entry a little tighter. Just go below that pre-market, a little bit beyond the pre-market, actually, just for swaps, spreads rather. Tighten it up a little bit, just so I can get in quicker. Because if it's going to be, if the CPI number, the PMI numbers come out as a big divergence, or big variance, we'll probably get a fast move. So we'll probably experience a little bit of slippage this morning. But we'll wait and see. So we got 2.5 minutes until the news. So we'll see where that takes the DAX. Let's have a look at the Euro US as well. See what impact we get there. Morning, Callum. One of my buy stops places a 1K volume trade. I noticed it and deleted it, but not sure why it's happening. Your broker isn't allowing you to place the right lot sizing. Make sure your broker allows micro lots, i.e. you can go 0.01 increments, and also make sure your broker has digits after price. If it doesn't, it's not going to work. If you're on someone like I think it's IC Markets. Somebody else has had that problem, and there's one broker for some reason it just doesn't work. Not quite sure why. Oh, just one of the buy stops. Oh, it's with FTMO, is it? I know. You'll just have to monitor that. I don't know what that is. It's not the EA, because the EA basically does one calculation, which is why all the orders going at the same size. There is only one. There is one variable for lot size. So the EA physically can't store two different lot sizes. So there's something where you're sending an order to the broker and they're going, nah, we'll give you 1,000. I don't know what it is, but that's not the EA doing that, because it physically can't store more than one variable. There is one variable for lot size, and it is the same. It basically calculates and stores that 9.61 in my case in a variable. So it can't go and find another number. There isn't one. Physically doesn't exist. So it's something that brokers have. It's since I've been doing programming for decades, and I've been building EAs and indicators for many, many, many years. I've never had any issues with anything to do with any indicator or EA I've ever built, apart from this one. And I can't get any sense from any forums or anything about why some of these things that this particular was not so much this instrument, it's this time of market. It's something to do, I think, with this volume that goes through. Brokers are just not able to communicate back with the platform and the EA in a sensible manner. There's something going on there. I don't know what it is. But there's nothing different in the way that I've coded this to I've coded every other product I've ever made. Never had a problem with any broker. But I don't know what it is. It seems to be volume related. It's just the fact that you got so much cramming through. I think there's a data disconnect or something somewhere. And it happens on MT5 as well as MT4. So it's not, they're different platforms. I don't know what it is. IC Markets has a minimum one lot. Yeah, you can't use IC Markets. Basically, change broker. If a broker is forcing you to use one lot increments on any instrument, run. They're forcing you to over leverage. You should have the ability to trade micro lots, trade whatever size you want on any instrument. If they're not, it's not for your purposes, it's for theirs. Just dump them. Well, that was a letdown, wasn't it? Look at that. Whoop-de-doo. That was the news. 42.6 on a 43.2. So the French manufacturing is down. Services is slightly down, but pretty much as forecast. So, negative overall euro. So bit of a spike on the euro. Look at that spread. Ooh, ooh, ooh. That's big. This is not going to be a data trade today. You can tell. Look at the spread here. That's the disconnect between buyers and sellers. There's no volume in this market today. That isn't the market selling the crap out of the euro. That's slippage. There's no volume. There's no orders. Look at that spread. It's huge. There's no one trading today. So I'd steer clear of everything today. It's not going to be worth getting involved. Slippage can be good because you get big candles and big moves, but not because they're selling the crap out of it. It's because they're reaching so far to try and find a buyer to fill their order. The market makes a big move. So, the banks need to sell. If there's nobody here to buy, but there's someone here wanting to buy, they will slip the market down to find that buyer because they need to get that sell order filled. If the buy order, the opposite side of that order is down there and it's not there, that's where they'll go. That's where that candle will go. That's why that spread is so wide. They're trying to find orders. Normally you'd have, even around news, before news you get big spreads, but after the news you get tight spreads because there's a huge volume coming in, which they're liquidating. There's no volume, no traders there. Yeah, be careful today. It's not going to be much fun if you're trying to scalp anything. It's going to be algorithmic. You're probably going to get rotation today. So it's just going to go up and down, making the banks money, basically. I have almost no spread on two brokers. That's good. Closed your pending orders on the DAX. Yeah, that might be the right thing to do today, Amy. We got the German at 8:30. So the German makes up the second half of the PMI for Europe. So basically the European PMI figure, the reason that one's orange is because I don't know what the exact percentage is, but sort of 80% of the PMI is German and French because they make up the vast majority of the euro transactions. So this is why these two are the red ones and that one's orange, because once you know the answer to those, you know the answer to that. So it would take some huge number out of some tiny little country to give it any deviation. So, yeah, 8:30 is the next moving event. We haven't even got out the cash balance, look. So I think I might call it a day as well. There's no point in trading this today, I don't think. It might get a run. I mean, it'll break out of this initial cash balance. Might do, might not. But I'm pretty sure it will move. But what I would be worried about today is actually getting anywhere. I think you'd struggle to get 1R today. So I'm just going to call it on the indices. I've had a pretty good week. I'm up 9.6% on the week. So week's done. No point in pushing it. I cancel the orders off over here as well. And obviously, there's no trading this afternoon because we're shut in New York. So there won't be any volume. There you go. That's a normal spread on the euro US dollar. Look. There's nothing. There is no spread pretty much. And, you know, after the news, you normally return to normal spread. You saw after that news came in, the spread was ridiculous. There's just no liquidity in the market today. I'll be surprised if anything really moves today. EuroCAD hasn't gone anywhere since I closed it out either. Meh. I think it's going to be a rubbish one today. Callum, you've been filled long? Oh, it's outro, by the way. Didn't realise my other account was logged in. Ah, okay. Got too many. You got a pseudonym. It's like somebody with a burner phone, isn't it? Something going on. 2 accounts. Trying to hide. Which of these those brokers? Robo Forex. So I only trade on Robo Forex at the moment. I still haven't put my. I've got an account, a live account with funds in with DOW still, which is for the S&P strategy, but I have not reactivated the S&P strategy yet. Because I'm not convinced we're back in a bull market yet. We could break that high, then I will look at potentially getting back in to buying the dips on the S&P, but at the moment I'm not convinced. We're back in a bull market. That's what a bull market typically looks like. Nice and contracted days and lovely market structure. That's just the weirdest bull run we've ever had in our lives, which caused that massive bear volatile. I don't think we're back in that yet. We've had that run, but that pullback there is too deep. That's what happens when we have a financial crisis and stuff like that. Yeah. So we're still in a mess at the moment. So, yeah. They're the only brokers I've got, Robo Forex and Darwin X at the moment. I've obviously got accounts with loads of brokers because I've used pretty much everybody over the years. I've got MT4s. How many MT4s have I got? 1, 2, 8, 9, 10, 11, 12. 12 MT4 installations I've got there. With, oh no, 12, 13, 14, 15 instead. 15 because I've got three Robo Forex accounts. So yeah, thanks for subscribing, Batchy. Welcome aboard, and thanks for subscribing, Chunks. Welcome aboard. Were you trying SIH on a small account? Yeah, that's the one that was running over there. Still running. Yeah. It's 38%. This month. I was trying to double it and I had a boo-boo. I took a a big loss. Not a big loss. I took a bigger than normal loss. So I can't remember which day it was. But basically, one of the DAX days, it got up to 50 something percent. Yeah, it was 50 something percent about a week or so ago. And because I was basically just trying to see if I could double the account in a month, and it was going really well. I was well on target. And then I had one day, and I can't remember which day it was, but we got hedged on 2 indices. I think it was the S&P and the NASDAQ we got hedged on. And I tried to get out of the S&P, and it didn't, and it rose, and I didn't re-hedge it. Yeah. So I took a double loss on that. It was more than a double loss. And then as we pushed up and I looked at, oh my God, I really need to get another position on this one, I decided to take off the S&P, and it took the aggressive position on that, and then that pushed. And I didn't re-hedge it. So I actually, on those 2 indices, because they're basically doing the same thing, I let them both run, and I took over a 10% loss. But I was up 50+%. I've had 2 down days, 3 up days in the last week. So it's running at 30. I think it's 38%. So for some reason, this terminal, I shut it down over there, but when I open it, it opens here, full size. Yeah, 34.87. But this week, I'm up 38.26% this week, look. So this account is running DAX at 2x risk. So I'm using double risk on the DAX, and I'm using normal risk on the US indices, because I'm only trading the DAX in the morning. So if we get a nice DAX break in the morning, it makes a really nice profit. And then as long as one of the afternoon indices gets a clean break, guaranteed profitable day. So I've set it up slightly more aggressively. And it's obviously set up super aggressive, because the idea is to double the account. So it's only $1,000 anyway. So tiny little baby one. But I just wanted to see what happens with high risk. If, the idea was to run it for a month, see if I can double account, and then make a video about how I doubled an account. But not to go, hey, you need to go and buy this because I've doubled an account. This is how you make a Lamborghini. It's more like, look, you can double an account. But do you know what happens if it doesn't work? Yeah, kind of this is what you can do if you use compounding. And what will happen is this, because I can show you a compounding set file with the stock index Hedge EA, and it blows it, because that's what compounding does. Blows it every single time. But only when there's a bad run. So if you get a good run, you will double an account and double it again and double it again until you don't. It's the same as martingale. Compounding works the same as martingale. If you go long with 1, and then you go short with 2, and you go long with 4, and you go short with 8, and 8 goes down, you win. If it goes long and you go 16, and then short and you go 32, and then you go long on 64, by the time it gets down to taking the 128, your account's blown. You're dead. Compounding works exactly the same way. If you use very high risk and you have a run of very good trades, you win. If you have a run of very bad trades, you lose faster. It's the climbing up the stairs, falling down the elevator shaft. Exactly the same principle works in compounding as well. Because the more money you have, the more risk you're taking, the bigger the losses become. That's what my spreadsheet on the website shows you. That's why I've got that spreadsheet on there. It shows you what happens if you try to compound stuff. It will calculate it all for you and show you the equity curve. There you go. That is a winning run, 50-50 winning run. Doesn't that look beautiful, that equity curve? You can adjust the equity curve. Look what happens when you have a bad run. If that happens somewhere here, those losses are exponentially larger. Good little tool to teach you how not to do things. I'm just kind of filling until 8:30. Oh, it is 8:30. Okay, so positive manufacturing for Germany and positive services. So overall, mixed, isn't it? So DAX breaking long. Euro is also going long. Wouldn't trust that move. So DAX double top on the initial opening range candle. Fair old spread there, look. Depending on where you are, yeah, you probably triggered long now. If you've left that running, you've probably just triggered long. Pre-market, you would have been long anyway. I think you'll find this will be back down here in a minute. I don't think that's a move. That's just same as that. They're just reaching for liquidity, trying to get some orders in. Basically, anybody since the London Open, basically, that's gone long or short is liquidated. Basically, that's their goal. Take your orders. Take your money. I wouldn't be surprised if that comes back down again now. Or they'll close the candle high, close at a higher price, entice everybody to go long, and then they'll come down, take out those shorts, and we just have a rotation day. That'll be everybody just dead. Because the bots need their liquidity. Did you manage to get anything out of the DOW hedge yesterday? Yeah. I've closed the platform down though. I'll open it back up again. I think so. I'll have a look. There wasn't a hedge yesterday. On the what? Sorry? On the DOW. Sorry. DOW. Yeah. No. Sorry. No, I didn't. No. No, I closed it out at a loss yesterday. So we got from the break. We managed to get 1.5 R. That was it. So we got to 1.5 R basically. So we had that initial break and then I hedged it. Now this was me being stupid. So the original hedge was down here. I moved this up to reduce my risk because it looked like it was going to break short. So it hedged me and then it rallied. So if I hadn't have moved that from there to there, I wouldn't have been hedged and that would have closed out in profit yesterday. So I ballsed it up yesterday. Basically, I took a loss when I didn't need to. But no, I didn't get out because it didn't go anywhere. I had my TPs set somewhere. There you go. I think it was ADR, wasn't it? Roughly. We didn't get anywhere near. We didn't get anywhere near where I wanted it to be. It just didn't move yesterday. So no exit yesterday. A little bit of a loss on that one. The day was profitable overall. 2.5% yesterday. 888. Don't forget to set up your Black Friday sale before you go away tomorrow. Yes. Morning Day Trader FX. I will do that. Don't worry. What's your adjusted risk on the Darwin X? The risk engines determined, shown down left on the dashboard. What? What's my adjusted risk on Darwin X? The risk engines determines shown down left on the dashboard. That doesn't make any sense, that sentence. Is that autocorrect gone mad? Do you mean, just putting it out there, what's your adjusted risk on the DAX? My adjusted risk on the DAX, if that's what you mean, is 0.75. Is that what I mean? I don't know what you mean. I don't get it. Sorry. Either autocorrect's gone wrong or you've gone wrong. The risk engines determines shown down left on the dashboard. No, don't know what you mean. Sorry. Compounding with massive risk is crazy, but compounding with just keeping your profits in the account to grow is normal. Yeah. But compounding, there's two problems with compounding. Yeah. First problem, how are you getting paid? You're not. Because if you draw money out, you can't use it to increase your lot size, therefore you can't compound. Yeah. So compounding on paper looks great. If you've got enough money to trade with to build an account, why do you need to compound? You don't. So the reason people want to use compounding is because they usually want to grow an account from A to B. So they want to turn a 5,000 account into a 50,000 account. Yeah. So 10x it. That's going to take you years. Yeah. Years. A good trader will be able to double an account in a year with high risk. Yeah. 5xing it is going to take you probably 3 years to get to a point where you'll be able to have an account big enough for you to actually pay the mortgage with. So you need 3 years of consistency under your belt. It just doesn't work. In theory, it all looks great on paper. Do it. You can't, because after 3 months of you going, I've cracked this, you'll double your lot size, you'll double your accounts, you'll change something, and that won't work anymore. Doesn't work. You need a big dump of capital to start with, and you use the risk that you're going to use moving forward. So the other way of compounding is to use high risk. So double an account quickly by using 5% risk per trade. Yeah, that account over there is using, I can't remember what it's using. 2% on the US indices and 4%. I can't remember what it's using. I'll tell you what it's using. But, all these courses that teach you, use 5% risk or 10% risk and you only need a couple of trades. Yeah, that is true when you get a winning run. But when you don't, it's not. So this is using 5%. So the DAX is trading 5% risk per trade. The US indices are trading 2% per trade. Yeah, so that's the US indices. Risk 1% of equity. Takes 2 trades, obviously, in each direction. So long 2%, short 2%. This one is trading 2.5%, 5% long, 5% short. But that's why it's done 38% this week, because it's very high risk. If I get a losing run here on the DAX 5 days in a row, that's going to lock in all that loss, basically, isn't it? Yeah. So It's not going to lock it all in. It won't make 38% loss, but it will make 5, 10, 15, 20, 25% loss. Hasn't happened. I've never had a week where every single trade is hedged. It just, just doesn't work that way. The market does move. You don't get 5 hedges in a row. And also, you don't get everything hedged. So if this one hedges in the morning and makes a negative 5% return, this one will break clean. This one will break clean, making 4% and making 4%. So that 8% cancels out that and makes 3% profit. Then if the other one hedges in at 2%, I make 1%. So it's, as you can see from the P&L, it's quite difficult not to make money. Because if you're trading 4 instruments, the only way you really can lose is if all 4 of them hedge. It does happen, but it's very, very rare. So if I'd have used 2% risk per trade on each of the US indices on that account this month, that would have definitely doubled it. Easy. But you can't sustain that. It won't sustain that. I mean, it might do, I don't know, but it's highly unlikely, isn't it? Not how the world works. If that was how the world works, we'd all be millionaires, wouldn't we? We're not. DAX is broken along. So if you are in the DAX today, obviously don't get too aggressive with targets today. Yesterday's high and just below yesterday's high, really, if you are in a long break. So if you took any kind of pre-market break with the ORB today, you are long. If you took the 5-minute today, you are long. So if you're long, you're trading straight into a propulsion gap, which has been tested twice. So we know that they're selling the crap out of this level, a la they are now as well. If we can get through this sell order here, that's where the sellers took control yesterday. So I wouldn't target anything higher than that. You're probably going to find we're just going to bounce around within yesterday's range today. Yesterday's range was fairly tight, and we had a full trading session. We've only got half a trading session today with obviously very, very light liquidity. So if you are long, don't get too greedy today. I think you'll be lucky to maybe even test yesterday's high, but we'll see. Alpha Capital got 40% off Black Friday. Everybody's got 40% off Black Friday. You want to go and try and get into a prop firm? Go for it. I'm not interested. I'm trading my own capital now. I have made very good money out of prop, and it was lovely. But after what's happened with my Forex funds, I'm lucky I've got my own capital to trade, so I don't need them. I can make 5, 10, 15 grand a month without prop. There's no point in me taking that risk. And it's hassle. It's an absolute pain in the arse. Every time you blow an account or two, you've just got to do more evaluations. You've got to run multiple evaluations at once. It's just a pain in the backside. I'd rather just stick 35 grand in an account and go, I'll trade with that. So I am. But yes, they've all got Black Friday sales on. So if you do want to get some funding, go for it. Yeah, if you haven't got your own capital, you're going to have to trade under incredibly tight trading conditions that not even the banks would make you trade under. Because the banks don't want you to blow your account, and they understand the market moves up and down and drawdown happens. That's what happens in real life. The prop firms just want you to buy more demos. But yeah, they've all got offers on. So if you're interested, there is an area on the website where you can go through. I'll put a link in there, but there's loads of prop firms there you can choose from. You can filter them all by whatever you want to filter them by. That list only contains the ones that I think are worth going with. There's loads out there now. There's absolutely loads. Who was it? E8? I think it's E8 have just basically changed their liquidity provider. Was it E8 or was it someone else? I can't remember. Somebody's just started using purple trading. I got an email about it. Yeah, it's EA. I wouldn't touch them with a barge pole now. Sorry. I've traded with purple trading in the past. They're a New Zealand, I think they're a New Zealand based broker. They are awful. They used to be, it was either FTMO or who's the other one? Can't remember. There's a couple of the founding prop firms. Basically, you used to be able to pick your liquidity provider. Purple Trading was one of them. They are awful. They're execute. I don't know what they're like now, but if you're going to try it, do a demo with Purple Trading and see what their liquidity and execution is like. It was terrible. It used to be awful. Purple Trading Seychelles they've gone with. So it's not even, and it's MT5 only. Seychelles, yeah. But yeah, be careful with who you pick. So E8 now, I mean, to be honest, I just think props just being kicked in the teeth by my Forex funds, unfortunately. We've now got 8cap and Purple Trading. So all the prop firms that used to provide their own liquidity, manipulate price, have all been told now, because of what's happened with my Forex funds, you can't do that. So they're now all going out to find liquidity providers. The top brokers that provide proper trading conditions aren't going to touch a prop firm with a barge pole. So you're going to be left with the tiny little crappy brokers like 8cap, Purple Trading, those sorts of guys who are going to go, yeah, we'll give you liquidity. Hey guys, look at all this extra money we've got coming in. Because it's just not good conditions to trade in. But it may have changed. I don't know. Go and try them. E8 were my go-to prop firm after my Forex funds. I can vouch for their payments and everything. Absolutely fine. But if they're now using Purple Trading and it's MT5 only, not interested. So they would come off my list. I haven't updated this for a while, actually. So, but yeah, sad if it is, if it's still crap. I mean, 10% a month consistently, not being stupid with it, seems easy to compound as long as you don't need to extract the money. Yeah, if you don't extract the money, yeah, £10 a month, 10% a month, yeah. I mean, you will. You can grow an account, but with growing an account, your risk grows. So if you compound, the problem with compounding is partly also a mindset. So as a trader, the most difficult thing to master is the psychological part of trading, the fear, which the position trading bootcamp removes because you don't have that fear of loss. And that is the biggest problem. With compounding, what you're doing is you're going in immediately with high risk. So you're going with high risk. So immediately you're on the back foot and there's fear. Every time that ticks against you, you go, Christ, that's 10 quid, 20 quid, 30 quid, 50 quid, 100 quid. Holy crap, right? So immediately with any kind of compounding that is high risk, it goes up a notch, the difficulty level of trading, because the psychological part of it is much, much, much harder. It also, if you are trying to double an account with high risk, so you're going in with 3-5%, and you manage to do it, which you probably will, immediately your mindset is now, that's what I'm going to earn. Yeah. And this is the problem with prop. This is why prop doesn't work for 99% of traders, because you are asked to return 8% growth on a 100 grand account, right? 8% growth on a 100 grand account when they don't give you a time limit. And when you bang that 8% in 5 to 10 days, you're like, I can earn 20 to 30% a month. You can't. You've just had a lucky flip a coin 10 times. You get 8 heads and 2 tails. Well done. You just passed a proper valuation. Keep doing that and see how many times that happens. Won't happen. It will blow the account within probably a month. This is why very few people ever get to a payment. Your psychology is, I have done it. It is doable. I can do it again. The weather can rain and it can be sunny. Which it's going to be, you don't know. And this is the problem with it. You suddenly find that your mindset is, I can earn a lot of money, therefore I am going to earn a lot of money. And your psychology changes. It's not right. Compounding at 5% risk per trade, where you go 5%, 5%, 5%, 5%, holy crap, I've got 70% gain on my account in 5 trades. This is easy. That is what you want now. You will try to do nothing but gain 5% a trade or 10% a trade. And immediately all you're doing now is gambling. Because the first time you get 10 losing trades in a row, that account's blown. Now you're back to square one. You've lost all the money. You're convinced you can do it at high stakes and you forget about normal trading. You'll never go back to it. You'll then system hop, trying to find a strategy with a high strike rate. And everyone that promises you a high strike rate on a curve fit strategy, when you try to trade it, it won't work. But because you've got that mindset of compounding at high stakes, you'll suddenly go into the tunnel vision of this is what I need to do. What you need to do is drop it down to less than 0.25% risk per trade and let the market pay you. You can compound that. Look, I mean, I've made 9.74% this month so far. Yeah. Keep compounding it. Keep compounding that, but do that. Don't do the high risk stuff because it's nice to, if you want to pay for a holiday, that'll pay for a holiday, but don't expect it to pay your bills because you need that capital. Your capital will diminish faster than anything doing that. It's just, but do it. This is what I say. Go and get 1,000. If you want to do a compounding, if you want to try compounding a $500 account with a percentage risk. Right? When you get that $500 to 5,000, come and see me. I don't think anyone's going to be knocking on my door this year, but if you can, brilliant. Yeah, and then we'll look at how it's done. But trying to turn 500 into 1,000, 1,000 into 2,000, 2,000 into 4,000, finally getting to that 5,000, it's going to have that. And every one of those is going to drive you mental. But you won't realize it until you do it. So that's what that spreadsheet is designed to show you. Hard work, very hard work doing it mentally. Is there a prop firm that lets you have accounts as small as €500 based in London? No idea. Oh, there is a prop firm that lets you have accounts as small as €500 based in London. They use Blackbull. Again, Blackbull, not a great broker in my experience. I haven't traded with them very much though. So I have had an account with Blackbull. I don't think I've got it anymore. Well, I still have it, but I haven't got the MT4 anymore. But yeah. But why did you need €500? Who hasn't got €500 to trade with? This is always my question. I get asked all the time, could you do a discount on your indicator? It's $49. If you can't afford $49, how the hell are you going to trade? Sorry, if you haven't got 4 or 5K in the bank, go and get a job. This isn't going to work. Why do you need $500 of trading? €500 of funding? It's pointless. You can't make money with that. If you are going to be a successful trader and return 10% a month, you're going to return €50. No one can live on that. I suppose if you're in a third world country, yes, you can, obviously. Cost of living is different everywhere. If you live in the UK, €500 is 2 meals out, isn't it? Basically. Depends which restaurants you go to, though, doesn't it? Can you recommend any other broker? Can you recommend any other broker other than Robo Forex? IC Markets are good. Axie are good. Darwin X are brilliant. I don't know. There's loads of them. Use big brokers, basically. Anybody that's big that uses 0.01 lot increments. That's all you need with a tight spread. Basically, the mistake people make with the broker, when you're trying out a new broker, the mistake people make is they go and get a demo account with them. Don't get a demo account. Sign up for a live account. Even if you need to put money into it and they say you got to put $100 or something in to get the live account, open the live account, because the live account spreads is what you're interested in. What's the spread like? Press the button with a 0.01. See how quick the market execution is. Yeah. Try them. All about execution. IC markets might be good. I can't remember. I keep getting IC markets and IG mixed up. But I used to trade with IG. I have traded with IC as well. All brokers are different, and you need the right trading conditions for what you're doing. If you're scalping, you need tight spreads. Forget everything else. Tight spreads, fast execution. That's all you're interested in if you're scalping. If you're not scalping, i.e. you are trading any time frame higher than the 5 minutes, it doesn't matter. Any broker will do. Because market execution is not an issue. Spread on the hourly time frames, the difference between that spread and that spread is not going to make a lot of difference to you in the long run. You're trading the hourly charts. Doesn't make any difference. Commissions are going to be important. Swaps are going to be important. And whether or not they spread the crap out of the market at night is going to be important. If you're using a stop loss. If you're not using a stop loss, doesn't matter. Use any broker under the sun. But use a big broker. One that's been established for 10 years and is regulated by multiple regulators in multiple countries. You're safe. I was with Alpari when the Swiss franc peg was removed, as you probably know, because I've told the story a number of times. But I was covered because I was with Alpari. They are and were the largest broker in the world. Use them. Use Alpari. They're a brilliant broker. I used Alpari UK, which is a UK arm. They went bust, unfortunately, on the Swiss peg removal. But your money's not safe with any broker at the end of the day. If World War III kicks off and there's a nuclear bomb landing on any country in the world, everything's going nuts. It's all going to disappear. So it doesn't really matter, does it? We don't get black swan events very often. So any old broker will do, as long as they've got good market execution. Execution is key. That's it. With IG, you can aggregate trades. So if taking multiple entries and especially multiple markets, it does not take up space. It does not take up space. What do you mean space? You're taking multiple. I don't know what that means, Wayne. It's a way you can aggregate with MT4. I don't know what that means. Nothing wrong with IC markets. Tammy, pound yen and pound US. Aggregate trades on the platform. I don't know what you mean by aggregate trades. I've never heard that term. Don't know what that means. GJ. DAX is going nowhere this morning. So all the yen pairs, basically, the question is, are we now in a bear market? I.e., is the yen powering up? So the pound yen specifically has been a lot more sideways than a lot of the other yen pairs. So it's very difficult to say whether or not this move that we've had in the last week is the start of a yen rally or not. If it is the start of the yen rally, this is a pullback short. If it's not the start of the yen rally, this is a pullback on the long. Don't know. The yen is very, very difficult to read at the moment, mainly because what's happened is we've had the US dollar yen rallying for such a long time, back up to the previous intervention levels from October last year. We've had multiple intervention attempts by the Japanese, which have failed. And now the market has dropped. in the same way as it did there, which was when we got warned about intervention. The market reacted itself. The question is this the market reacting itself? Or is this the start of yen strength? We don't know. If it's the market reacting itself, we're probably going to have another attempt at highs. The yen, I think, is probably going to start to power up specifically against the US dollar, because I think the US dollar is now going to start to weaken. So therefore, if that happens, you will find all yen pairs will do the same, because it will be the yen in the driving seat, and therefore all yen pairs will start to drop long term. But there's no confirmation of it yet at the moment. We're kind of in an expanding move really at the minute. We don't know. When the market expands like this, it means we're ready to pick a direction. We don't know which way it's going to go yet, though. So don't know on that. And GU is going to be dependent on US movement. We've got the PMIs for the pound coming out at 9:30 this morning. That will move the pound potentially. But looking at what's happened with the euro this morning, probably won't, to be honest. So pound US dollar, in theory, we will probably, if the US dollar is going to weaken, continue to do what we're doing. I'll be looking for longs. But since the CPI figure last week on the US, it has not come back and retested that propulsion gap this week. We've had very little movement this week on the US. So it's a little bit difficult to tell. I was hoping we were going to get more movement on the US this week, but we haven't. So I think until we get the first interest rate drop, which is not going to be until sort of Q2 next year, I think really at the moment you can kind of trade everything in every direction. I don't think there's a real directional bias you're going to find on anything. So as long as the market is extended, you can trade the pullbacks. Yeah. The pound is not strong. The US dollar is not strong. And not strong against a not strong is something that moves nicely. Any direction, really. Just wait for RSI extensions. You know, we're not moving. We're not extending. There's no profit takes to be had. If there's no profit takes to be had, no reason to get in. If taking multiple entries, it will display the total with MT4, can end up with a screen full of entries and orders. I don't know what that is, Wayne. It's something that they're providing, obviously, in that broker with IG. I don't know. I don't know what that is. I don't trade with IG, so. I don't know. Sorry. Alpha Capital asked me pre-approved of EA. How can I send them one of yours? You can't. They don't want you using commercial EAs, which is why they ask for pre-approval. You cannot provide pre-approval, therefore you cannot use. Use a broker, use a prop firm that does not require pre-approval of EAs. There's loads of them out there. I mean, you can, I don't know, you can send them screenshots, I guess, and you can explain the strategy to them. Grateful Buster, he means adding the total sum of all positions and seeing your total entry size versus viewing a long list of individual positions. Okay. Right, so you mean like my dashboard. The reason I built this is because MT4 doesn't do this. So if your IG can do this, brilliant. Yeah? I don't know. My Trade Manager dashboard is designed for position trading. So it shows you your exposure, it shows you your individual drawdown, and all the information about every trade and what you've done. Because this does not exist in MT4. That's why I built it. If you've got something with IG, which is probably an indicator or an EA they've built, which shows you all this information, that's great. Yeah. I couldn't find one that did exactly what I wanted, because position trading is different to most trading strategies. There's nothing out there that really did what I needed, so I built it. Gold, I don't trade gold, I knew, but it does the opposite to what the US dollar does. So US dollar has been dropping for a week. It's been going up. At the moment, you're up at resistance. So you've just had a reversal alert on the hourly. No, you haven't. Sorry, because of that move. So when it breaks that low, sellers are in control. I would say sellers are probably in control now, actually, because we've broken that low. So there's your high, low, lower high, lower low, lower high going in at propulsion. Target that to the downside. All right, watch. Instead of viewing 10 individual trade entry lists, you view one list with all 10 positions in a summed total aggregate of the combined entries. Yeah, combining entries. Yeah. So it's basically what the dashboard does, isn't it? They've obviously provided you with some indicator which does that, because MT4 doesn't do it, or MT5. So MT5 actually, MT5's a little bit more configurable, but I don't. It's still not as configurable, is it? Right. Well, we're not going anywhere today with anything, so I'm going to call it a day there. If you're in the DAX long, as I say, just watch that high from yesterday. That's all you can really do today. So that's your pre-market break. That's your 5-minute break. So whatever you've done today, you are long at the moment. If you did get triggered on a short there, that would have stopped out and you'd have flipped long. So, but as you can see, there's literally nothing going on with the market today. There's no volume. So as I suspected, it's Thanksgiving. It's just going to be, unless something dramatic happens fundamentally with news, you're not going to get anything today. I don't think so. It's a day off. So just holding everything basically overnight. Banked that 1% this morning. I have got CAD Swiss that I can bank, but I'm just going to hold it because it's not really moving anywhere. We have made new highs as well. So we got that double bottom. We've put in new highs now. So it's a very, very, very messy structure, but there is bullish structure there. So yeah, hopefully we're just going to pull back on that leg. But yeah, I'll keep an eye on it tomorrow as much as I can, which won't be a lot. So yeah, I'm off tomorrow. I'll be back Monday. Anything you need, I'll be in Telegram today and tomorrow morning. Yeah, so we'll get the Black Friday sale set up as well. I'll probably do that this afternoon, actually, because I won't have time tomorrow. Yeah, I'll be back Monday, really. So we'll just see what happens. But go and do something else today. And obviously, don't try and trade the US indices this afternoon. Even if your broker has got them open, it ain't real. So don't do it. You're just going to get chopped to bits. All right. So have a good evening, afternoon. And tomorrow I'll be back on Monday. If anything happens, I will obviously post on Telegram. But other than that, I will see you guys Monday. Have a good weekend.